I think the first place you have to start is with yourself, right? And really becoming the kind of person who can really take on the kind of monumental task it is to run a business. And so that work really begins with you and your own beliefs and your own willingness to suffer, your own sense of mission and purpose. Because when you have that kind of enthusiasm and that core drive, your fingerprints are going to be all over your organization. Your employees will feel it. It will just, you are kind of the heart of your organization when you're starting it out. And so if you don't have a healthy heart there, you're not really going to win.
This is the Play Your Position podcast, where we huddle up, call the plays, and inspire you to run your ball into the end zone. Are you ready to score more game-winning touchdowns in your life, business, and career? Then listen up, because it's game time, baby. Now, here's your host, Mary Lou Kaiser.
Hello, Team PYP. Mary Lou Kaiser here. Thanks so much for joining me for another episode of the Play Your Position podcast, where we talk all things leadership and self-development and getting out there on the great playing field of life and playing your position to the best of your ability. Today, I have a very interesting guest joining us from Sacramento, California. I'm going to tell you a little bit more about her in a minute, but first, Catherine, are you ready for kickoff?
I am. Thank you for having me.
Yeah. So team, let me introduce you to Catherine Tindall. Like I said, she is currently in Sacramento, California, and she is one of the partners at Dominion Enterprise Services, which is a specialty CPA firm that works with other firms and their clients to maximize their tax credits. So you're going to want to pay attention today, because she is going to take us inside the world of taxes and how we can avoid some of the scams that are constantly going around, as well as ways that, we can look at doing our taxes perhaps with a more positive attitude. She has been doing this work for quite some time, and she says that her goal with her partners is to provide you a return on investment for the tax credit work that they help you do. And again, I'm going to let her tell you her story. And right out of the gate, we're going to set the stage, Catherine, for when you first got the call to leadership. How old were you? What was going on in your life? Were there any influences that led you to a life where you are in a leadership role? Tell us that story.
I would say probably looking back on my life, kind of one of the first instances of me, when you get to a certain point in your professional career, you look back and are there things in my childhood that should have told me that this is where I would be? And I think for me, one of those big moments is when I was a young teenager. I ran a concession stand at a baseball field, facility. And
right.
Basically, I just got thrown into running the whole thing, and I enjoyed it so much. And it just it was a great experience for me, and I loved it, having to keep all my little supplies stocked and doing the sales and balancing the register and all that kind of stuff. And so now when I now running the CPA firm, it's funny for me that a lot of those same things that I enjoyed so much in that experience, it's actually kind of similar. When you're in a leadership position, you really have to wear so many hats at once. And for me, where I'm, my technical background is, taxation work. That's, where I've had most of my education work. But running a firm, it's, I have to know things about marketing. I have to know things about, internal accounting. I have to know things about legal, and I have to know things about technology and app systems and just all these other things that you have to learn. And I've found it to be such a wonderful experience to get to do all of those things and wear all of those hats. So that's been a little bit of my background. And basically I started with, in college, took some accounting courses, loved it. My parents were both CPAs, so I knew the kind of life that it was just from growing up with two tax CPAs for parents, and started working for other firms with, when I was in college, I knew I was going to have my own practice. That was kind of how far back that went. That was always my ambition, was to have my own shop. And, it's been great. It's great to see when you lay strategic plans like that. And especially when you're strategic in your career moves, that you really can get to where you want to go. And, the importance of that groundwork that you do early on will pay itself off, when you have kind of a master strategy. And so, that's where I am now, kind of at that leadership, running the firm, and just, enjoying scaling and managing a growing organization.
Yeah. So I'd love for you to talk a little bit more about making that transition from being a tax expert, somebody who's actually doing the taxes, to now you're scaling a business. The day-to-day responsibilities for you have shifted. What was that like for you? I mean, if you had the vision, it sounds like, to one day always have your firm, but when you get into that role, you realize, oh wow, this is I'm not just I'm not just filing someone's taxes anymore. Now I'm actually running a business.
Yeah, and I would say my experience with that, and what I really appreciated, and I think was the right move, is starting off with a really strong and deep knowledge of some technical area or some area. So being really deep in one area, but then being pretty broad in the rest of the business functions, I think is a good formula for success. Because by starting off with that tax base and that knowledge of that really niche subject matter, it's allowed me to identify opportunities, and it's allowed me to identify ways to create value and where pain points are with what people are dealing with, in a way that if I was just a very general business person, it's hard to identify those true opportunities, and it's hard to identify the real value that you can provide to people because you don't have that depth of understanding. And so I think starting from that technical acumen has been a really good thing. And, from there, because really with a company, this is my opinion, really with a company, like, our goal is to bring more value into the marketplace, and then it costs for us to produce that. And by having that deep experience, you're able to identify, okay, what are the most, and, for me too, so what are the most valuable things that I can do? And where are the pain points for people that I work with? Like, where are they, and what are the worst ones, and how can I get rid of them in an efficient way? And when you have that technical background, you can really focus on that. And so it becomes really easy to drive the rest of the parts of the business. Like, for me, one of the biggest challenges was learning how to do marketing properly, and, understanding the process there, especially like digital marketing and things like that. And, that was more of a challenge for me, because as an accountant, you're kind of a multi-tool anyway. A lot of, especially for tax accountants, a lot of our clients ask us for a lot of things. So it's like, I'm used to reading, dealing with banks for mortgages, and, dealing with having to do different softwares and things for our work. But it was really the marketing piece was the biggest gear change for me, because it is a completely different discipline. And the same thing too with sales. Like, even though it's a consultative sale when you're doing technical tax work for people, but you still need to have sales skills, which is its own discipline. And so, starting with that really value-based product, it makes a lot of the rest of those processes easier as you learn them. But you still do have to execute those things well. And it's, if you're used to just being the technician that focuses on, your one thing that you have the technical expertise with, that's not enough. You'll have to master all of these other basic business skills, at least to the point of, basic functionality, so that if you're going to be delegating things to a vendor, like a marketing company or, a salesperson or that sort of thing, you as the entrepreneur and the business owner, you do have enough acumen yourself to know whether or not those things are performing. And then also to have your systems talk together intelligently. Because for us,
yes.
Our sales process and our production process, the people who are working on the tax returns versus the people running the sales, which in this case is me, I do all my own sales work, because I know what the production people do and I know exactly how the work goes, I catch problems on the sales side when it's, this isn't going to work for you because you have this one issue, or tell me more about this. I need to know, things like that, where it's, if you try to delegate things too quickly, your systems won't communicate together intelligently. And so you can end up with these disconnects that fuel a lot of inefficiencies in your business. So that's why my whole time, it's just been a slow scale. I'd rather be in pain a little too long than try to scale too quickly. And you're kind of, instead of trying to fix the core problem, which is usually just efficiencies, you're, just trying to throw bodies at a problem, and that it's not going to work as you grow. But so that's been my take on it.
Yeah, that's nicely said. I like that you are very clear that being an expert and with that deep knowledge of one area of the kind of business that you are involved in, because obviously taxes it's a broad topic. You could specialize in all kinds of different. It's kind of like medicine, right? You've got your podiatrist and your anyway. And then I'm curious, as once you realized, or once you made that decision, okay, now I'm ready. Not that we're ever ready, but now is the time for me to actually form my own firm. You brought up the word delegate. Do you have employees, or do you work from an outsourced model where you bring on freelancers in different areas to help you run your firm?
We do a mix.
You do a mix. Okay. Yeah. And I talk a little bit about being a leader, managing the vendor side of things, because I know there's listeners who hear that at some point you have to let go of some control and hand over certain functions of your business to other people and trust that they're going to get the job done. I like that you emphasized that you have a working knowledge of the different aspects of business so that you're not completely naive about what's going on, because that's when you can get into trouble. Because if you just turn something over and you have absolutely no idea what's going on, I am a trusting person. However, I do know that there are incidences where sometimes people can get taken advantage of because they realize, oh, this person knows nothing about subject X or subject Y. And at first it looks all shiny and good. And then down the road, you realize, wow, they've been completely railroading me. Oh my gosh, I wish I'd paid more attention or whatever. But what are a couple of tips that you have for listeners who might be in a position where they want to start delegating and they're looking around for that outsourced help?
Yeah, I would say, the biggest piece that I've experienced with the outsourcing the help, and I think maybe this is just a leadership thing in general, but, I see where when there's gaps in knowledge of, what my company knows how to do, like I'll just use marketing as an example, because accountants, are not really trained in any kind of marketing anything in school. You do want to invest the time just to learn about it, so that when you are talking to people, you can have an intelligent conversation. And I think the more, and this has been my experience with, my own technical work, is the more when you talk to a vendor that they're not having to translate into common language what they're doing, and they can just speak, technically about what's going on, and you can understand them. That really helps you to know exactly what they're doing and what's going on. And it also helps you to, kind of weed out, what's good and what's bad. And I think for me, like, I'm just a curious person to begin with and like learning new things, because I think when you have somebody who understands how everything fits together, when you're dealing with an outside vendor, there's things that they don't know about your business, and that unless you're going to be the bridge between your business and then what their function is going to be, there's probably things that they're going to do that will be inefficient, just because how you're describing something to them, it doesn't translate directly to them based on what you're doing. This is just assuming if you have like a fairly complex thing that you do, but it's probably simpler if you're, a doggy daycare or something, to communicate with a marketing company. But, I think it's in your best interest to really try to have a broad understanding of things, just so that you aren't, when you're talking to somebody, if they know what they're talking about.
Right. Right.
And then, especially for things that are a little more squishy, like marketing, where there's not, a board of marketing that people have to get a registered license with, like those sorts of things. And I think the other piece of it too, that maybe people underemphasize, is if you're getting into a situation where you're going to be having to deal with a very technical professional, having somebody on your team who you trust to help you vet that person is also important as well. Like for the tax credit work that I do, it's a very specific sub niche of work for business owners. But people usually find me through their tax accountant, and when people don't, I say bring your tax accountant on the call because they will know what I'm talking about, and they'll know that we know what we're doing over here. Versus to you, I can explain to you all day long, but because you don't understand what I do, it's not gonna help you trust the process and really understand just because you're not an accountant. So I think that's part of it as well. If you have tech people with ability, bringing them onto those kinds of sales calls so they can vet people. But I, knock on wood, have not had any bad experiences with vendors so far.
That's good. That's good. Yeah, you hear about those every now and then where somebody, you put I think Tony Robbins talks about that. He at one point just handed the reins over to a company. He said, listen, you do what you do brilliantly. I do what I do brilliantly. I'm going to go over and do my work and I'm going to, hand over this. And they ended up just, driving him into the ground. And you look at someone like him who's so successful by social standards, the money, the visibility, the family, the this and that. And then you hear these behind the scenes stories of how, we naively, innocently can get ourselves into a situation. So your suggestion of having someone who acts as a bridge in a way is a great tip. Just so, because we can't, as much as we want to, time and reality just don't allow for us to become experts in every aspect of running a business. And like any other business, like you said, a doggy daycare, a local bakery, your CPA firm, there are certain things that you're going to do really well as the leader of that business. And you're going to have to trust that the people you bring on, whether as employees or freelancers or vendors, are going to do what you need them to do, and everybody's going to talk to each other, and it's going to make sense at the end of the day. Which brings me to my next question, Catherine, about making sense. Okay, so taxes, it's something that people hear and their eyes roll in the back of the head. Like, I don't even want, they avoid it. They just, or I'm sure you have clients that come to you and just say, here it is, and I don't even want to know, just do it. Like that ostrich with the head in the sand. In our pre-chat, we were talking about how because of technology and a lot of these DIY systems like TurboTax and such, what are some pitfalls that the average person here in America needs to pay attention to when it comes to tax season?
So for tax season in particular, and maybe just taxation in general, especially if you're an individual where you don't own a business, you just earn a W-2 wage from an employer, there's really not hardly anything you can do to save taxes, permanently, other than doing things like, you're just stuck. It's just an unfavorable status. And so, you're stuck in that position, and, basically what's left to you is little pittance things like you could do retirement contributions to try to defer your taxes. There's just really, it's all like Mickey Mouse kind of stuff as far as trying to save money. But if you're a business owner, that really changes, because as a business owner, you have control over, basically you're going to get taxed on your profits. And so you have control over what that number is going to be, because if you run a business and you show a paper profit, but then you're able to do things like invest into expansions, purchase real estate, things like that, you can really, I'd say game the system, but it's really just, the tax code is just a series of rules, and it's like a complex board game. Once you know what all the pieces are, and once you know how all the pieces move, you can successfully navigate it and pay very little in tax if you have the stomach to do it. But it just, it comes down to having strategy around what you're doing in your operations and your strategy for growth. And certain industries are just, they're just going to get stuck kind of no matter what. So if you're in,
like, which ones?
So if you're in like professional services, for instance, where the product that you deliver is services, and so basically your only expense is really wages, you have some technology, some software and office expenses and things like that. But it's wages. Wages are driving. That's the main, the human capital is the asset that's driving the profits. And when you're in a situation like that, there's not very much you can do there. Just because, you don't have you can't shelter it with deductions coming from other assets. But, I'd say for most people, the biggest pitfall I see for business owners is they don't realize that, taxes are something that happens. You true it all up at the end of the year with a tax return, but in reality, it's a funnel for all of your business activity. Everything's going to go through that funnel, which is the tax funnel, and out the other end comes, what the taxes are that you owe. And you can modify how you're going through that funnel in real time to lower how much you're paying by either doing things like expansions. There's smaller techniques like, certain ways to defer things, but for the most part, it's just knowing what activities you have available to you and really treating it as a proactive process to try to reduce what you're showing for profits at the end of the year. And for some people, the answer is always just going to be, well, at the end of the day, you're paying like I would never tell somebody, buy something just to save yourself tax. Like it has to be strategic for the things that you're doing where it's going to produce a future return. And so you're hedging on, current expense for a future return. Like you're going to expand into a new location, or, you're going to buy a piece of equipment that you can then, say you're in construction, you're going to buy a piece of equipment that'll reduce your labor costs in the future, or it'll allow you to do more work and earn more revenue, things like that. Where you can game it, especially when you're in the early years, because if you're paying, 30% on $500,000 is a lot more painful to you dollar-wise than 30% on $20 million.
Oh, yeah.
Right?
Wow. Yeah.
It's halftime here at the Play Your Position podcast, and we've got ourselves a great game. While you're up grabbing another snack and topping off your favorite beverage, make sure to subscribe to the show so you never miss another play. PYP is available on Apple Podcasts, Spotify, and wherever great podcasts can be found. Now, let's get back to the game.
And so if you game it early on in the life of your company to make sure that as you're growing, you're keeping those profit levels in check so that you're not getting hit as you're in that smaller scale level, if you can, and it's effectively a deferral, right? Because you're trying to buy expenses or grow into locations or, pay for payroll for people who are going to be sales or things like that, where they produce a future return. You will pay the tax when that return comes in, right? But you'd rather pay it. I'd rather pay that 30% at 20 million than 30% at 500. And so that's why you have to be in that mindset of, if you're in a growth mode in your business, really keeping keeping an eye on like, okay, what are my profits looking like? And are there ways for me to deploy this cash now into things that are going to produce a future return so that effectively I'll drop what my profit is, but I'm really not dropping my profit because I'm just cashing this money in now for a future return through doing, expansion activities. And that's, I think, the thing that most business owners miss is they don't think in that kind of mindset of, okay, I'm going to think to the future, what's going on in the future and what can I do now to bring that forward to really save the tax? Because if you're spending money on wages for more salespeople, or you're spending money on, a new location and things like that, you're helping push yourself. And this really only makes sense if you're kind of in you start to hit those top bracket amounts where it's basically a moot point because you're going to be paying about the same, whether you're at the 1 million or at the 4 million or whatever it is. Right. If you're in that zone where you're still paying, 10% or something like that, enjoy yourself there. Like don't,
have a good time.
Yeah. Right. Like don't go crazy unless strategically it makes sense for other reasons in the business. But, so that's my main advice. I think most people miss is that you really do, when you're doing the math on what's a good return on investment and things like that, you really do have to take the tax effect into account and really keep that as a key piece, because it for a lot of people, as a business owner, it ends up being like 30% of, and that's just the federal, if you've got an aggressive state, And then you've got Social Security taxes. On top of that, it's like you could be almost at 50% in some circumstances. So you have to pay attention to it. And that's why I have it, I usually tell business owners, you need to have a good relationship with a tax accountant. And most tax accountants are not going to offer to do, they'll just do what you're engaging them to do. They don't tend to offer more services than you ask for. And so and that's everybody, because that's, I think, just kind of my profession. So when you engage with a tax professional, engage them to talk during the year and pay for those consultations and have them run, projections for you and help you work through, some of the cash flow restraints with, okay, if we do this, this is what our cash is looking like. And then we'd have to make a payment for that. Have somebody work with you on that stuff and schedule it in and plan it and do quarterly meetings, because if you're ahead of it, you're in control by the time it comes to tax season. If you're not ahead of it, that's when tax season becomes scary, because you haven't been keeping an eye on it the whole year. And so, how much do we owe? I don't know. And that's when it gets really scary for people. So that's why I tell most people, if you're past 100,000, if you're making more than 100,000 in your business, you should be having quarterly meetings with your accountant.
Okay. So that's that benchmark is 100,000, which is good.
Yeah, I would say of a profit, that's when you want to have a quarterly meeting with your accountant. Okay. I think when you're under that, you just want to kind of get a sense of roughly where your percentages are, just so that you can have, save up enough money on the side to make your estimated payments. But, I think if you're growing and scaling a business, you need to be fairly aggressive with the tax situation pretty early on.
Mm-hmm. Oh, there's so many things you brought up that are. One is at the very beginning of what you were talking about is basically if you're in a service-based business, forget,
Yeah, because there's nowhere for you to put the money into other than wages. So if you can get employees that are ROI-based employees, so you can get people who do marketing or who do sales who are going to drive more revenue, that would be a forward-facing activity. But that's such a short, it's tough.
Yeah, it's too bad, because I know many entrepreneurs are service-based. They certainly in the coaching and consulting field, and yet, I mean, it doesn't seem right that you couldn't go invest in some like a piece of real estate, for example, and weave it into your portfolio. But it's like what you just helped me understand, and I think Team PYP as well, is that there has to be an alignment between what you're investing in and the future of your business. And so it can't just be this random investment and you say, well, Look what I bought. It's like, no, that doesn't compute. So that was very helpful to hear that. As far as some of the scams that are going around, what should people look out for?
Yeah, so biggest number one scam right now, and it's not that the program is a scam, because I do this work, it's the employee retention credit. You've probably heard tons of advertising, probably gotten emails about it if you're a business owner. And we're just in a very weird situation with this program where it's a wonderful program when it works. It was unrolled very sloppily by Congress and by the IRS. And so basically the issue with it is that for the US tax system is kind of weird. So it's a voluntary system. So the IRS basically is depending on you to self-report things correctly. And they don't really check what you submit, because when you submit it, you're saying this is the correct information. And so tax credits work in a similar way, where all you need mechanically to do the filing is there's a little registration that you do with the IRS. I think they charge you like $30 to get an ID with them. And then a paper and a pencil, a printer, and some stamps. And you can start to file these claims for this credit. And the problem with it, I think that people don't realize, is the IRS is so backed up right now that they're not really checking anything when it comes in, unless they're, extremely large. And so they just pay out the money without actually, reviewing your information. And so you've got all these companies that have jumped onto this employee retention credit who are not tax professionals that are trying to peddle it. And they don't understand how, I don't know if it's if it's intentional, which means fraud, or if it's just negligence. I lean towards that kinder reading of just people who are naive about the complexities of taxation. Yeah. And so they're filing these claims for people that are not actually eligible for the credit. So I'm dealing with a lot of cleanup work from situations like that, where you've got these companies who don't understand the rules and they're, filing these credits to the tune of, hundreds of thousands of millions of dollars that are erroneous and just the clients are not eligible for it. So that's the biggest scam. And I would say how if you're dealing with a situation like that is if you're a business owner and you had employees and you're operating during the pandemic, if you had inconsistencies in your revenue, so your revenue wasn't just steady or growing during each quarter of 2020 and 2021, if you had a lot of inconsistencies, or if you were, subject to government orders that force you to modify how you're operating, what that looks like most of the time is, you do something that's public facing. So like restaurants, personal care services, retail, things like that, those tend to be subject to restrictions. You could qualify for the program. It's up to $26,000 per employee. That's very misleading because that's the maximum amount you can get for the credit, but very few people qualify for that full amount. I don't think I've had a single case that qualified for that full amount for everybody. And basically how you can know if you're in a scammy situation, I just tell people, have your tax accountant on that phone call.
Yeah.
They're going to know whether or not it sounds legitimate. And if they're not comfortable with it, you shouldn't be either. It's not like the PPP where it's a, free for all of handout money. It's very specific circumstances. Companies will qualify for it. And so if you're dealing with somebody who's not very scrupulous, they could overfile for you and you're going to be the one left holding the bag when the IRS comes back to do the audits, which will be happening soon. So
oh boy,
it's a real mess of a program. So that's my...
Well, it's good to know because again, the average person is not going to have the insider knowledge that you do. And obviously it doesn't apply to everybody, but there may be people listening who this affects, or they have people in their life who this affects. And it's important to be aware of, it doesn't surprise me one bit that you use the word sloppily. I mean, it's almost like, they just get so tired and they're like, here we go. Let's just get this out. Check a box.
They treat it like a product.
Right.
Instead of a technical tax question. And that's why I tell people, if you went to your doctor's office, your doctor's office and they told you have cancer and it's a salesperson talking to you about the chemotherapy, you'd be a little skeptical, right? Like that would be a big red flag. Like, do I actually have cancer? Or like, are you guys trying to sell me something?
Exactly.
Because it's not a product. It's a technical tax situation. You either qualify for it or you don't, but it really should feel that the whole process of dealing with somebody should feel like I'm at a doctor's office. I'm being diagnosed with something. So it's just a big red flag. And that's why these companies are so negligent, because they're a lot of them tend to be marketing companies and they treat it as a product rather than as a diagnosis, and that's just very different. So the incentives are wrong. They're trying to, they're just trying to get their fee. They're trying to get as much out of it as possible rather than really being obsessive about getting the credit done correctly, which is what you would get working with a licensed tax professional on it.
Yes. Hence, team, why you want to know about people like Catherine, because she knows what she's talking about and can steer you in the right direction. And the whole, just the amount of misinformation. Sometimes I just shake my head and say, we supposedly live in a great country and yet this kind of stuff happens and it makes you wonder who's really in charge. Talk about leadership, right? What is going on?
Yeah, terrible.
Yeah. So I'm curious, besides that's a current thing. What are some ways that again, people who are running businesses of all kinds can, I guess, enter the leadership conversation around, profit and loss, besides investing in, are there any other ways to protect money that's earned? Because it seems like when you say that the percentage of 50%, that's a lot. It's like, no wonder we hear about all these offshore things and people trying to hide their money, because that's a big chunk. I mean, if you're making, I understand that if you're up in the millions a year, like if you're pulling 4 million, 10 million or whatever, but then you cut that in half, that changes the dynamic of your whole existence.
Yes.
Yeah.
Yeah. So I'd say the main one is you need to have a tax advisor who's helping you with that, and that should be the level of engagement you're looking for if that's what's going on. But I think more than that, you have to take the matter into your own hands and really do get a basic understanding of what's going on and what's available to you. The other piece of it, as you start to get into those thresholds, people push these tax shelter kind of things that are, it just tends. You tend to land yourself in hot water with the IRS for a lot of those kinds of schemes. And so you really want to make sure that whatever you're doing, in a lot of ways that you're not getting these like crazy trust structures involved and things like that, that what you're doing, it's something that you can understand, but it's just taking advantage of just the way that the system works. There's certain things that certain companies can do that are pretty beneficial, like captive insurance, companies and things like that. But, you really want to work with a practitioner who's fairly conservative, and that any of the techniques that they're doing doesn't sound like you're playing a shuffle game with different code sections, like it should be fairly straightforward. And then at the end of the day, if you feel like you're getting yourself into these, complex transactions, at a certain point, it's like, do you really want to, if you really don't understand what's going on, do you want to run the risk of that falling apart? Because you just not understanding what's going on is not going to be a valid defense with the IRS.
No, it's not.
At a certain point, it's like, just pay the taxes, you're just, and especially once you start to get to those higher levels, there's not a lot of legitimate ways around it where you can sleep easy at night. So I just tell people, the real key is when you're in that growth phase, because you can game the system naturally by just timing your expenses and timing your expansions. Like that's going to be the best bang for your buck, as far as the planning technique. And then there's other certain little things like if you haven't looked at your entity structure in a while, sometimes how you're operating can be inefficient. So maybe you're, just an LLC, but you should be making an S corporation election and file as an S corporation. Maybe you should be a C corporation because they have a flat, lower tax rate depending on what you're using your money for. So things like that, you want to revisit your entity selection of just how you're operating your different companies, how you have those structured, those sorts of things. But that's all pretty, routine for tax professionals. If you just, ask them, hey, I'm trying to, make sure that I'm operating tax efficient. Can I engage you outside of tax season? Can I engage you to do an analysis on, how I could be operating more tax efficiently? Yeah,
that's a great tip. Who is an ideal client for you, Catherine?
So for us, our main work right now is with the employee retention credit. Most of my work actually comes from other tax professionals because I educate on the credit itself. So that's work that we have open right now for, new clients that we'll take. And that includes resolution work for it. So if you feel like you've had a bad claim done and you need somebody to take a second set of eyes on the situation and clean it up with the IRS, very often I'm dealing with those situations now where people got too much or they got too little and it needs to be adjusted. That's something that we help with as well. But it's, primarily that employee retention credit work.
Okay. And is that something that you do all year long? I mean, there isn't an end date.
It's going to start phasing out in 2024, but then we're going to be busy with the resolution work because that's going to go for several years after that. But it's available, it's a retroactive credit. So it comes from 2020 and 2021.
Yeah.
And to call it a credit's a little misleading, I think, for most people, because it really comes back as a cash refund.
Got it.
So it's not like it just gets applied to future taxes. So you actually get checks from the IRS in the mail, but it's available to apply for at any time until it starts to expire in 2024.
Okay. Well, that's good to know and to be really clear because, again, listeners, it may not apply to them directly, but they have families or they're, in relationships with business owners, and that if this is the buzz going around, I mean, it pays to be smart about it as a leader, let people know that Catherine is out there willing to help and keep anybody from getting into hot water. Because that's the thing. My question here as we come to an end of this really fascinating conversation is, from your experience as a tax professional, what would you say is the greater driver of tax mishaps, ignorance or greed?
Ignorance, I would
Okay.
say. Most people I think are rightfully scared of the IRS.
Okay.
They're probably a little too scared of the IRS, to be honest, because the IRS abides by the same, we all have the same information as far as the laws that people are subject to. So
sure.
It's, as long as you're within that and you have good documentation, the IRS is really nobody to be afraid of. But it's mostly ignorance, and people, I think that the main thing that catches people is they don't realize, especially with this program, that there's such an enforcement gap that, you can have somebody file for this thing and the IRS is just going to pay it out without double checking it. And it's really going to be later on that they come back to do the audits.
And so you're in trouble.
Exactly. Like, it's not like the PP, it's not like other programs where if you apply for it and they're going to say no, they say no before they give you the money.
Right.
The IRS doesn't do that. They're just going to give you the money because, like I said earlier, for tax programs, it's a voluntary based system. So it's when you file things like this, you're saying to the IRS, I did all the math. I calculated all of it. I looked at all the eligibility rules. I qualify for this thing. Just give me this money.
Right.
And they say, okay, how much do you want? Okay, great. Here you go. That's how that process works. And it's just,
it's going to bite. It's going to bite so many people. So, I'm just so glad we're having this conversation. It's not my world at all. But I know that the value is there because it clearly has affected, it's happening right now and it's going to affect businesses down the road. And, again, we're all ignorant about some things, but it really is up to us as leaders to be as aware as possible. And conversations like this can raise the awareness. That's the whole point. So for people who'd like to learn more about you, where do you hang out online?
So I used to be, not during tax season, I'm pretty active on LinkedIn. And then if you want to learn more about the credit, we have a bunch of resources on our website about it. And then you can get in touch with us because we do, complimentary assessments of situations to see if it's, if you need assistance with it. You can visit our website. It's dominiones.com. And either of those places, you'll be able to find out more about us and the credit.
Awesome. So team, that links to connect with Catherine will be on her show notes page at pyppodcast.com. Of course, you can go straight to your internet search bar and type in dominiones.com or her name and she'll pop up. LinkedIn is, I think, the first thing that pops up under her name. And worth having a chat if you or someone is in this situation with the employee retention credit, or just you're looking for someone who's really smart and knows what she's talking about when it comes to taxes. It's great to have that resource. And before we say goodbye, Catherine, can you share with us a couple of books that have been instrumental to you on your leadership journey?
Probably the first one, which is more of a mindset thing, is Meditations by Marcus Aurelius.
Oh, okay. Going old school.
So we've got a little romance. But I think as a business leader, I think the first place you have to start is with yourself, right? And really becoming the kind of person who can really take on the kind of monumental task it is to run a business. And so that work really begins with you and your own beliefs and your own willingness to suffer, your own sense of mission and purpose. Because when you have that kind of enthusiasm and that core drive, your fingerprints are going to be all over your organization. Your employees will feel it. It will just, you are kind of the heart of your organization when you're starting it out. And so if you don't have a healthy heart there, you're not really going to win. So I would say that's probably the first one. And then one that I'm reading right now that I'm currently liking is Wooden on Leadership.
Oh yeah, John Wooden.
Yep, and it's also just a really, really great, quick, fairly light read, but similar kind of topics where it's just about, what are the characteristics you need to develop in yourself and in your team and the habits of success, and that when you do those things, the rest will follow. So I've really enjoyed that.
Nice. And it's appropriate that as of this recording, we're recording this on the precipice of March Madness 2023. It'll be over by the time this airs. But I think, John Wooden is one of, if not the greatest men's college basketball coaches of all time, and such a wise human. I have not read that book, but I know there's several people in my life over the years who, they're big men's college basketball fans, and they just talk about that book. And I like also that you brought up Marcus Aurelius, because, everything old is new again. And there are some timeless principles about self-leadership and self-awareness that, as you said, we put our fingerprints on everything we do. You might as well, we don't have them all greasy and covered with black paint or brown paint or gray, smeared all over the place. Have your trail be, just know who you are and stand for what you stand for, and be proud of that. Great recommendations. Really great. And this has been very informative. I've learned some things, and I appreciate the work you do, Catherine. We need people like you in the world who are on top of these ever-changing rules and regulations that impact us, what one way or another. So thank you so much.
Yeah, thank you for having me, and hope that wasn't too dry. I always try to keep it a little interesting with the tax stuff, but it is a very dry topic.
Hey team, Mary Lou here. Who's number one in football changes from year to year. Fashion trends come and go, same with musical tastes. But leadership skills, they never go out of style. In fact, these days, leadership is an essential survival skill for a world that demands more from us than ever before. To succeed these days, you need to know how to show up for yourself so that you can then do the work you love with people you like the way you want. The Play Your Position Leadership Playbook helps you do this, and it's free. Go to pyppodcast.com to download your copy today. If being more successful this year, next year, in the 21st century is on your to-do list, get your copy of the Play Your Position Leadership Playbook now. pyppodcast.com. It's at the top of the page. You can't miss it. That's pyppodcast.com, and start being more of the leader you are meant to be today. This podcast was produced by Daniel Romeros. Show notes for this episode can be found over at pyppodcast.com. I'm Mary Lou Kaiser. Thanks for listening.
Here at the Play Your Position podcast, we believe that the road to self-mastery and a life well lived starts with answering the call to leadership. That's when the fun really begins. Send this episode to any friends who might need to hear the inspiration and ideas you heard today. And feel free to rate and review us on your favorite podcast platform.